Today we are going to talk about reporting. As Mark said, it's primarily going to be on the 1094C and the 1095C. This is the first year that those are required by the IRS. They are reported on a calendar year, not a policy year. So if you are a October to September policy year, you still have to file these on it based on the 12-month calendar. Employers, these are required to be filed by employers with 50 or more full-time plus full-time equivalents. And there are some additional steps for self-insured plans, but today we're going to focus on companies that are fully insured. And another thing to remember as we go through this, these forms have not been finalized, so they can change. What you'll be looking at today are the latest drafts of those forms, but they have not been finalized. So the 1095C form, if you think about it, it's much like a W-2 for insurance. Effectively, what we're doing is we are telling the government what that employee, their life cycle for insurance in that calendar year. So we are explaining if we've offered coverage, if they took the coverage, if they did not take it or were not showing they took it, why did they not? And we'll talk a little bit about that in a moment. But this is basically a W-2 for insurance. These have to be provided for calendar year 2015. They have to be given to the employee by January 31st, 2016. And you do have to, just as you do a W-2, you have to provide one copy to the IRS and one copy to the employee. They have to have the form to fill out their year-end tax returns. And these must, and this is a common question, the 1095C form must be provided to every employee that's a full-time employee for at least 1 month. So if they're not a full-time employee, you don't have to provide it. But if they've been a full-time employee for at least 1 month during that calendar year, you do have to provide them this form whether they took the insurance or not. If you don't fill out these forms and file these forms, the penalty is $100 per return. So if you have 100 people, that's a $10,000 fine, and the maximum fine is $1.5 million. And you are, if you are a company that's under common ownership, so you have sister companies, every large employer is liable for filing their own return. So each company would have to file these returns. Now, what we'll do is we'll look kind of at the different components of these forms, and then we can kind of talk about how to fill them out, the codes, and so forth. Obviously, the top is just employee demographics and employer demographics, name, social, the name of the employer with their EIN and so forth. Just the common information that you typically have on these forms. Really the guts of the form, or where the most important parts of these are it's part 2, which is lines 14, 15, and 16. And talking about line 14, and we'll take these line by line, effectively what we do with line 14 is we're going to track the employee and if we offered them coverage and what type of coverage that we did offer them. And if you think about this, all of the penalties and all of those things that go along with ACA are driven by the coverage that we offered. Was it affordable? Did it meet minimum standards and those things? So through the 1095 and the 1094, that's effectively what we are reporting. So we're providing the government the information that they will then utilize to determine what or if our penalties will be. Now, when we look at the different codes that can go on line 14, so again, what we're doing is we're explaining here what kind of coverage we offered, if we offered any. And this is something we do have to note by month, okay? So 1A, and I'll go through these real quickly, 1A is a qualifying offer of minimum essential coverage. So if you remember from our prior seminars, you have to provide a minimum essential coverage that provides a minimum value at an affordable price. Qualifying offer minimum essential coverage providing the minimum value What we're saying with Code A is that we offered that and we used the federal poverty line safe harbor. Again, if you remember, there were 3 safe harbors. There was one that was the federal poverty line, there's where you use the W-2, and there's one where you use the pay rate. So if you're using the federal poverty line and you meet those criteria, you use 1A. Code 1B, 1C, 1D, and 1E, those are if you offered the minimum essential coverage and minimum value, and if you offered them to the employee independents, the employee spouse, and so forth. So those are the ones that are the core that most people will use. Most people will not use the federal poverty line safe harbor. So typically it's going to be 1 through E, 1B through E. 1F is not providing minimum value to the employee. So effectively you may have had insurance, but it didn't meet the minimum value criteria. 1G is if you offered who was not full-time for any month of the calendar year and who enrolled in a self-insured coverage. That's probably not going to be used as much. 1H is that there was no offer of coverage of any sort. And then 1I is qualifying offer transitional relief. If you'll remember from our last seminar, we talked a little bit about transitional relief and that companies with 50 to 99 full-time equivalents have the opportunity, if they meet certain requirements, to get transitional relief and effectively push their ACA requirements 1 more year. So if you do meet those criteria and you're not offering coverage, you use 1I.
Hey, Chris, it's John.
Yes.
I think it is important. While they may seek transitional relief, which gives them the opportunity to have pushed back offering insurance, they still have to do the 1094 and 1095.
Correct. The transitional is purely where you won't have the penalty or the assessment, but you're still required to do all of the reporting. That's true. Line 15, you only have to fill out line 15 if you use codes 1B through 1E. If you use any of those codes, then what we have to do is we have to put in the lowest cost monthly premium for self-only, minimum essential coverage. So what this is they may not elect employee only, maybe they elect family. But what you do here is you put in the amount that the employee would pay if they were employee only in the lowest plan that you have. So a lot of companies with ACA coming, they have a what they call a bronze plan, which basically is a very low benefit plan that meets those minimum requirements. It's a low cost, as well as they may have a better plan that you can also choose from. The amounts in this column would relate to the bronze plan. And again, it's not necessarily what they elected, it's just what they would pay if they selected that lowest level policy as an employee only. And when you put this information in, you do need to use cents. I know a lot of tax forms you round off to the nearest dollar, but for this one you do need to put in cents. Line 16, what we're doing here is we are listing the safe harbor codes and other relief. So if you think about what we've said so far, is in line 14 we've said, did we offer coverage and what type of coverage did we offer? Line 15, we're telling them how much that coverage cost. And then line 16, what we're doing is we're saying if the employee took the coverage or if they didn't, what is our, why didn't they? Okay, or maybe not why didn't they, but why, what protects the company from them not selecting it? So the codes for line 16, and we'll go through these. One is that they weren't, 2A, they just weren't an employee. So for that month, they weren't an employee of the company. Line B, or code B, is that they're not a full-time employee at that point. So it could be that they were a part-time employee for a period of time and then switched to a full-time. So for the period of time that they were a part-time employee, you would use code 2B, and when they switch to a full-time employee, you would then utilize whatever of the remaining codes need to be utilized. 2C is that the employee enrolled in coverage offered, and if they are, 2C is the dominant code. So regardless of any of the other things that we talk about in these other codes, if they took coverage, you're going to use 2C as your code. 2D is the employee is in a waiting period, measurement period, etc. So we've talked in prior seminars about the initial measurement period, and so if they are, let's say in March, that employee became we did the initial measurement period calculation, and they became a full-time employee. So for January and February, they would be in a measurement period. In March, we would then say that that they became a full-time employee, and whether they enrolled or not. There is a 2E is a multi-employee rule. That's rarely used. You probably will never use that. If they don't elect coverage, then what we have to say is, did we use one of the safe harbors? So did we use the W-2 affordability safe harbor, which is 2F, 2G, which is the federal poverty line safe harbor, which we talked a little bit about before, and 2H if the rate of pay safe harbor was used. So now we're explaining what safe harbors were used, or if they did elect the coverage. We also have section 3. That's if you're self-insured. In that section, you do have to put some dependent information. So that is a 1095 form, and the different codes and how that would be filled out. The 1094 form, if you think a W-3, it's a W-3 for insurance. Basically, this is the summary report we're providing to the federal government that shows all of our insurance statistics, and we'll talk about that. This is the form that determines your employer liability. Therefore, if it's not correct, it's got to be correct. What happens is, after you turn this form in, the federal government will take the information you provided. They'll go to the marketplace exchanges, determine if subsidies were taken out by your employees, so forth. They do their reconciliation, and then effectively they will send you a bill. And right now, will that bill be in 6 months, a year, 2 years? I don't know, but we do know that there has been a lot of confusion within the IRS on this, so we don't know the timing of those bills. These forms must be submitted by either March 1st of 2016 if you're filing manually, or March 31st if you're filing electronically. Again, the top part is just company information, that typical demographic information that you would enter. You also have to put in line 22 your certification of eligibility. So effectively what we're doing here is saying what method are we using to calculate the penalty B, or I'm sorry, penalty A. It's either the qualifying offer method, where we're offering the minimum essential coverage to employees under the federal poverty line safe harbor. Again, not many people are using that because it is a more expensive option. What most people are going to use are the qualifying offer method transition relief. This is if you are offering insurance up to 95% of your full-time employees. Now, in 2015, that number's 70%. But this is the one that most people are going to use. There is the third one is the transitional relief. Again, it's, as we spoke, if you're 50 to 99 FTEs, you can qualify for transitional relief if you meet certain requirements. If so, you use this one. Or in 2015, if you have 100 or more full-time equivalents, you also have the opportunity to eliminate the first 80 employees in the penalty A calculation. So if you're doing that, you would use that. You would check this box as well. The fourth option is the 98% offer method. Basically, this is that you're certifying that you offered for all months of the calendar year affordable health care coverage at a minimum value to 98% of your employees. for those that you're filing a Form 1095-C form. Most people, this again is not going to be a highly used one. The one that most people will use is the qualifying offer method transition relief.
So Chris, to make sure everybody understands, if after the IRS goes through and does this reconciliation of here's who went to the exchange, maybe applied for subsidy, et cetera, and says, okay, ABC Corp, that person was on your 1095, your quote unquote insurance W-3, we're sending you a bill for the cost of that. You're going to go, okay, that's fine, except for I'm at a safe harbor, which was one of those situations you spoke to. Is that correct?
Right. So, well, yes. So what they are going to do is they will take for the different penalties. So they are going to take the 1095s that you submit, and they will say, okay, for these 50 employees that you submitted a 1095, did you offer all of them insurance? And if you did not, or if you offered them, if you did not offer them, and then also if they did not take the insurance, did you fall under one of the safe harbors? If you did not offer them insurance and they went to the exchange and got a subsidy, then what they're going to do is automatically, then you'll get your bill for your penalty B. What they will do with the 1094 form is they are going to look, and it's what we're looking at now, is you'll see in column A it says minimum essential coverage. What you're going to have to attest to is if you met the 70% rule, that you offered 70% of your full-time employees minimum essential coverage for 2015. And so if you did not, and you do have to attest to this by month, so this is a calculation you have to do each month, then what they will do is look to see if any of the employees that you filed a 1095 form went to the exchange. If they did and they got a subsidy, then penalty A kicks in. And so that's how they reconcile the 1095 forms that you submit, the 1094 form, and the exchange information to determine what your penalties are. And again, if they can do that, I'm thinking this first year it may take them a year or two to get that done. I don't see that being a quick solution at all. So in this section, in part 3, again, as I mentioned, we are attesting in column A whether we met the minimum essential coverage offer indicator, and you have to do that by month, or if you met it for all 12 months, you can just check yes on line 23 or no on 23 if you did not. You're also attesting to the number of full-time employees by month, and we'll talk a bit about that in a minute on where that number comes from. You're also noting if your total number of employees, if you're a member of an aggregated group, and what that means is if they're a common ownership where there are actually multiple sister companies, and then in column E, we're saying if we have transitional relief, or if we are using those first 80 free. Okay, because they'll need to know that when they look at calculating the penalties. Now, the calculation of the full-time employees, and that's a question that comes up a lot. The way you do that is you start with your standard measurement calculation, which we talked about. That's typically done in concert with open enrollment. So you take your standard measurement calculation, and then each month you have to perform a initial measurement period calculation, which tells you if there were any new employees that met that 1,560 hours. If they did, then you add that to the standard measurement calculation finding. So if we had 100 with our standard measurement calculation, the next month we do our initial measurement period and we find that we have 2 more employees that met the 1,560 hours. Now we have 102 full-time employees, and then obviously if there were any terminated, we would take that from that number. So I know I talked to a lot of companies that did not bother with the standard measurement calculation because they didn't think they needed it, or the initial measurement period. But you're going to have to do those calculations in order to fill out this form, because that's how you're going to have to calculate your full-time employees. And then in 2015, you have to, of that number that you calculate, you have to have offered at least 70% of those in order not to get not to be at risk for penalty A. So that's a big calculation. That's an important thing. Again, this is the form that they're going to use to calculate your penalties. So it's very important that it's done accurately. Part 4 of the form, that is just where you're telling them if you are part of a controlled group or an aggregated group, and if you are, you just have to note what those other entities are, so that way they'll know how to aggregate that. You know, this one thing to note, obviously this is not legal advice. The 2015 forms, again, have not been finalized, so they can change. Will they likely change much? Probably not much, but they can change. Again, the ones we looked at are the latest drafts, so I don't think it will change much from this, but that is possible. So are you ready, John?
I am, thank you,
Okay.
Chris. So as Chris mentioned, there are a number of data elements that must be completed for each employer that meets the requirement of being over 50 ALEs, and even if you are applying for transitional relief, you still have to complete the 1094 and 1095s, because the health insurance, the PPACA, it had the portion that pertains to business, but it also had an individual mandate, and this is really the way that the IRS is going to determine if John or Chris or our families were insured. So when we saw the initial 1094 and 1095s come out, we found that FMS and said, what will our clients need, our payroll clients and our BPO clients, what will they need in order to be able to provide the information to FMS and then to the IRS, the requirements to fill out the 1094 and 1095s. So we developed, we took several weeks, frankly, and took a repository approach. End of the day, FMS is not attesting to what you guys put out there and which codes you fill out, which safe harbors you elect, etc. So what we are doing is providing a repository for you to populate data into, sadly, which is so onerous it's unbelievable, but sadly on a monthly basis by applicable employee. And the screenshot you have here, there's not a lot of magic in looking at these next few slides, except to show these are the kind of things that you're going to have to provide to us in order to, if you elect for us to do the 1094, 1095 filing on your behalf. So next slide, please, Chris. So you can see on the first page we had corporate company set up. The next slide simply speaks to it by employee. Next slide. There's really no reason to speak to these. Here we've got the beginning of the month, the end month, or which of the, I think it was a dozen or so characteristics or options did you pick to offer this employee under. As Chris said, I think very few are going to offer 1A, but in this case, in this example, we did. And then we say down below the safe harbor was 2C. So next slide. Yeah, this just tells you the year next and the client number. This is part of our internal stuff. And so here is a written copy. We also wrote some reports so that once you have populated, and I've got employers that are doing this monthly. I've got employers that are doing it quarterly. When I say doing it, obviously you should be tracking it monthly anyway, but I'm talking about uploading it into the system. We developed some reporting so that you could see by employee, how the boxes are being filled out. I think one of the hard tips of this thing is if you hire employee X in June, and that person, at some point becomes full time, you've got to go back earlier in that year and put them back in as whatever code it was for not employed. This report simply is a way to look and see what you have entered into the system, a way to audit what you've done. Next slide. So rather than having to do this manually, we developed some spreadsheets in which you can populate as applicable by employee and in aggregate as to how to do it, and it can be saved as a CSV file, just like a journal entry would be within our accounting side, and can be uploaded into the system. I spoke earlier this week, actually, with Chris Purcell, who developed all of this on our behalf, and Bonnie Keener, who is one of our payroll managers. Once this is over, I think, as many of you guys know, we sent out a letter inquiring if you wanted FMS to do these filings on your behalf. We've gotten dozens and dozens of those back. We're going to, once we get those in, we're going to take a look and stratify everybody that signed up into sort of homogeneous groupings of company size, et cetera. And we're going to do a very granular series of here is how the information you gather, here's how you get it into the spreadsheet, and here's how we get it uploaded. So I suspect those webinars will begin likely middle of August, and we'll do as many as it takes until everybody is on the same page. Next slide, please. Chris, there we go. So again, if you're self-insured, we are also finalizing a repository, just like for the full coverage, the Blue Cross Blue Shield. We are comprising a repository for the self-insured side too. A lot of our guys, clients have where they buy Blue Cross Blue Shield, but they also have a portion of self-insured status, and so we're going to make sure that we take care of that. Next slide, please. So that completes the 3 webinar series on PPACA. Chris Cooley has been a wonderful resource. His email is on this page. As I said before, as a disclaimer, we at FMS are certainly not going to offer legal advice vis-a-vis PPACA. It's that really is an HR legal function. Chris's company certainly offers that. If anybody that I know, a number of folks that have seen these webinars have called him, that's great. I call Chris personally all the time to ask questions on behalf of customers. We are going to offer these services relative to the 1094, 1095 from FMS, again, on a repository basis. I have mentioned before, we have PPACA reporting that is built into our system from a standpoint of gathering data for determining full-time or part-time and assisting with measurement periods. There is no extra cost for that. Anybody that's on our payroll system can use it today. If you have questions, John C. at fmssolutions.com. But that is built. Chris, I know you're using it for some mutual clients. It works pretty well. It's not the end all, but it certainly, I think, provides the relevant data for everybody to do that. I would say too, as we have established this relationship with Chris and his company, we're going to do some future webinars. We're still looking for some topics. I think the next 2 are going to be sort of a go back to basics. One is going to be on hiring of employees and the applicable things from an HR perspective you need to make sure you do. And then the next one will be on terminating employees. If there are topics that you would like to see covered on these free webinar series, sort of these lunch and learns, if you will, send Chris or I an email. Again, it's jonc@fmssolutions.com with, hey, I'd like to learn about X or Y, or I'd like to learn more about PPACA. And if we get enough interest, we'll certainly do more webinars along that educational opportunity. Well, so I guess that's it for today. We are going to have a 4th webinar in the series because this does have some questions that maybe need more granularity than just a question at the end. We'll come up with that. Again, if you have specific topics or questions, email Chris or myself, and we'll cover those. I mean, end of the day, that's what we're here to do.